All right, I guess we can go ahead and get going. Um, Hello, everyone. Thank you for taking the time to join this session on Apollo. Apollo is a hyper resource for founders and those considering becoming founders. My name is Bill. I'm a venture development specialist at Hyper. Hyper is a leading UK and Australia venture studio. We believe in creating a level playing field for early stage tech entrepreneurs by providing every idea with the best possible chance of success, regardless of the founder's experience, background, network, or capabilities. And over nearly a decade, our founders have raised over 170 million pounds and have seen multiple exits to date. Today, we are super excited to welcome to the Founders Roundtable my good friend, Phil White. Phil has raised over 8 million pounds to date for his ventures. He is a serial entrepreneur in the clean tech space and circular economy. Phil, great to have you.
Thanks, Bill. Great to be here.
Hopefully everyone can put up with our accents for the next hour. I'm originally from Oklahoma and Phil is a Yorkshire man, so we make a bit of an interesting duo. We're also both Leeds fans. I know we have some other Leeds fans in our cohort, so let's go Leeds.
Yeah, let's go Leeds. We'll talk slowly so you can try and understand what we're saying. We'll try and be a lot more eloquent than we usually are.
I'm going to go ahead and drop his LinkedIn into the chat so everyone can see this. Do your background research. We might have some time for some questions at the end, but for now, I'll go ahead and take it away. So Phil, love to get a little bit more of a background on you. How did you end up getting into tech?
Yeah, so I spent my entire life in construction from a kind of very working class background. So never really had a line of sight into what an entrepreneur did or was. And then I finished my career on the executive team at Sydney Metro, where I was delivering the Underground Railway down in Australia because I lived down there for 10 years. And I started to notice big problems in the industry. And I was like, well, no one's solving them within construction. So who is going to solve for these problems? And it was that kind of started my entrepreneurial mindset in terms of solving problems. And when I actually left my role in construction, I've had a couple of failed businesses, as most seasoned entrepreneurs have. You know, you got to kind of wear the punches, and you got to. Oh, wait a minute, my camera's gone weird. It connected my phone camera for some reason. Yeah, and then I quit my career and actually didn't solve problems for construction. I solved problems in the sustainability space, which is where my passions are. And my first business was a mushroom farm at Sydney Airport, where I collected coffee waste from the airport and grew oyster mushrooms on it to sell back to the airlines. A great business. It was really fun to do, but it didn't quite have the impact that I wanted it to have, and it cost me my life savings essentially. So I learned the hard way. And it's great to have things like Hyper around because they hopefully won't have you spending your life savings and failing on your first business, which is a really good start. And what I realized was to set myself up with the most chance of success, I really had to solve problems in an industry I knew intimately and that I had connections and networks within. So me and my co-founder, we went and we built a business called Cloud Cycle. We knew that concrete was a big concrete. People think concrete, and when we were pitching investors, they were like, "Isn't concrete a little bit niche?" And we're like, "Well, no, it's 10% of the world's CO2, and it's the second most used material on the planet behind water." And the problem we solved for was that concrete companies can make concrete really well, but then when it goes in a concrete truck, they have no idea what happens to it, and there's a digital gap before it gets delivered to a site, and that leads to a lot of the wastage, which is worth hundreds of billions a year. So me and my co-founder, we came through a program in London. We raised our pre-seed there, and then we started to raise during the pandemic. And not only that, we were a hardware-enabled SaaS player. We had to build hardware from scratch. It was like the land of the unknown, but we had a mission, and our mission was to save 1% of global CO2 by putting Cloud Cycle on every concrete truck on the planet. And that business is scaling through Series A now, and it's been a really wild journey, and on that journey, maybe a lot of you might come to this crossroads as well. I actually realized that my passion is building businesses and not necessarily running them. I'm really passionate about early stage, creating value from nothing, getting it going, and then once the toddler's kind of like walking, or the child's kind of walking and running a little bit, I'm very comfortable stepping back as CEO and putting someone else in to run that business because it's already going, right? So with my current role, I'm now solving some of the world's biggest challenges, working for a big VC out of the Middle East, building some crazy projects as an entrepreneur resident. So I'm building about 2-3 ventures a year. Think of me as an early stage CEO where I get throw in a problem statement from the client, and I then go build it as the entrepreneur residence, and I get it to early revenues, early traction, and then we put another CEO in, and I start building it again. So the early stage stuff is my bread and butter. It's what I'm passionate about, and helping other people at this early stage is also what I'm passionate about.
Sweet. I often tell Phil that he has the dream job, but now that I'm working at Hyper, I also feel like I have a dream job as well. So I'm actually one of an early stage investors in Cloud Cycle, Phil's venture. He's kind of told me in the past the grind it took for him to start getting those early investors in. I'd like to hear a little bit more about the strategy you built for investment, other than just telling me over a couple of beers. So yeah, if you could kind of tell us about that grind and what it took, that would mean a lot for a lot of our founders who have a lot of the same questions.
Yeah, I think look, if any of you have done any kind of sales, or if any of you, even with early stage business development, customer outreach, if you need to speak to customers to inform your development, you're going to have quite a low success rate on either getting onto a successful customer call just to learn about what they think about your product or idea, or converting a sale. It's exactly the same with investment. If you're outreaching to 100 investors, you're going to be lucky if you get a one that answers yes. So you've got to be prepared for this almost to be a full-time job, especially if you're the CEO. You have to trust your team around you to pick up bits of the business that you would normally run in an investment cycle. And it's outreach. Like I mapped every single investor in Europe, in the US, and every high net worth individual that I could find about investing in this space, who would be interested in investing in this space. Because a lot of the time with green tech, like it's seen by investors as maybe a bit of a longer term punt. And we had the hardware element in as well. So I knew that, like a lot of the traditional VCs in London wouldn't even take my call because they're just like, hardware, too hard. If they don't have that slightly impact driven element behind them. And ultimately it involved, stomping a lot of pavements. Like we did our demo day in January 2020. And when did COVID start? Like March 2020. So like 2 months later, we were like, oh, this is going to be cool. It's going to be easy. And then the world it didn't collapse, but it paused. And a lot of the investors were just kind of like, oh, what do we do here? But thankfully, because of my early outreach, being really methodological about who I'm hitting, what I'm asking them for, understanding their wants and needs. Like you need to know who you're pitching before you pitch them. So research them on Wikipedia, find out who they are from their LinkedIn, what makes them tick, try and find out what their personal lives are like as well. If they like football, me and Bill connect over football with, a lot of the time. And make it personal, because it really makes them feel like you've taken some time out to know them. Trying not to be, it sounds weird, but over salesy. Like I'm a natural salesman, but it's like sometimes I got to just like pare it back a little bit. And at the same time as not being over salesy, recognize that this is a two-way conversation. Like they need to deploy capital just as much as you need capital. Maybe not quite as much, but like hopefully you're not like got a few days of runway left. And the important thing for me is it's not just taking any money, right? Even if you've only got one check on the table, like don't just take it unless you've done your due diligence on the investor, you've met them, can you work with them? They're going to sit on your board for the next 3, 4, 5 years, and then eventually you might have to give a slice of your company to them, and you don't want to be resenting doing that. So you've got to have a personal relationship first and foremost. You've got to have aligned interests in terms of the sector that you're in, and every investor in the world will tell you they're a value-added investor. Really probe them on what that means, because half of them are just full of shit and it's not really true. We were lucky, like we got some really great high net worth individuals in our first rounds that were like concrete sector specific. Like they knew all the CEOs, they knew everyone, and like they now sit on our board, and that's been really good for us. And I guess in terms of depending what stage you're at, if you're sort of pre-seed, you want to be really looking at those kind of family office type setups, or you want to be looking at high net worth individuals. If you can find, there's a lot of kind of brokers out there that have networks of individuals who can invest behind them, and we found one of those. So we actually set up a nominee structure, which means that our cap table looks clean. and we just have lots of high net worth individuals investing into a nominee structure. And then we also had quite a prevalent family office from the Middle East invest in our seed round as well. So essentially, although we had 20 or 30 investors on the cap table, we only showed two. It was the family office and it was a nominee structure. And I believe that there are tools out there to help you do all that, like on seed legals and things like that. There are many ways to do it, because what you don't want is to have 30 individual names on your cap table, because that will just look crazy and people will wonder what's going on. So our first round was family office, high net worth individuals, and we were like, we'll build a product and we'll have it in market in 18 months. That didn't happen. The hardware took longer, so we had to keep going back and saying, look, we need a little bit more cash, a little bit more money, a little bit more runway. We were just buying runway basically because we were in construction. Our sales cycles are insanely long, and our deal terms were insanely long just to find the actual revenue. So basically what we did then, because we were pre-revenue, it was kind of like we really had to have our customers be our evangelists to our investors. And basically, our investors needed as much confidence as me and my co-founder had, that these customers weren't just like taking us down the garden path by having us make hardware and put it on their trucks to pilot. We had to believe that there was an end goal here, which was long-term contracts. So we used a lot of that customer sentiment in our follow-on discussions with our investors. And I'm not going to lie, there was some hard discussions. It was like, wait a minute, you said you were going to have revenue by now. But you've got to be kind of open with your investors. I made the mistake of over-promising and delivering time and time again. And like salesman Phil kicks in. So you've always got to be really honest with yourself and like under promise, over deliver every time. And an investor would appreciate that much, much more. And you won't get half as many bollockings from your investors by over promising if you under promise and over deliver. So always promise on the conservative side. Finally, kind of as we moved through seed and we started to get customer traction and a view to customer contracts, that's when we really started thinking about kind of, okay, what VCs can support us. And that's when we started to bring early VC checks in, because we knew that they had the money to the funds to continue our development and to continue our growth. And what you'll find is, the smaller tickets and the early investors might start to tail off a little bit, and then the VC will start to take you off past Series A. And that's usually what happens. Obviously, your early investors have the option of coming in, but sometimes the ticket size gets larger.
Yeah. You spoke a little bit about like creating more runway, and you guys were kind of raising towards that. I know that Cloud Cycle also went down the route of getting some grants. Can you tell us a little bit about the strategy for getting grants?
The grants, they can be great, they can be evil. No, so look, say what you want about the UK government and the politics at the minute, but there's a lot of money on the table for innovation, and we really tapped into that. If whatever business you're running, if you can tie a sustainability angle to it, I'm not saying go out there and greenwash, but I'm saying like, is there an opportunity here to save waste? Is there an opportunity here to save CO2? Is there a social mobility thing that we can play with here? Would that be a good place to start as a niche if we can get some government grants? Providing that you can execute on a government grant without taking your eyes off the actual roadmap and mission of the business, I would recommend that you try and find them. Innovate UK is probably the main hub. You can Google the government grant website. You can put keywords in there in terms of what you're doing versus what grants are available. A couple of red flags to look out for. Sometimes a grant can be a white elephant. You have to resource a grant. You have to. It's like writing a dissertation. They give you the money and then they expect to return, right? So if you're not equipped to do that, then if you're a CEO and you're spending more time servicing a grant that you got for £20,000 instead of building your business, the grant could kill your business. So you have to take grants when you understand what the responsibility of taking that funding is, and you have to be able to resource that funding. In the early days, we used grant writers. We used Sustainable Ventures. They do a lot of grant writing for sustainably focused businesses. And that was a way of kind of set and forget for us, because they do no win, no fee and these types of things. So we're like, we'll try some grants. And we actually basically won every single grant we ever went for, which is a miracle. But obviously it resonated with the problem we're trying to solve. And we raised 1.5 million in grants, and that's still ongoing. So we're still raising grants all the time to fund our crazy R&D agenda that we've got moving forwards. Be cautious. They can be white elephants. They can be more trouble than they're worth sometimes. The bigger the grant, the more you need to resource it. Like we have 2 full-time people that basically works on research projects, which is basically exclusively funded by grants. But we almost carve them off out of the business and go, right, you live in the future, you get grants. And what we actually did, we used Grantify. So we started by outsourcing our grant writing. Then we used Grantify, where you write your own grants with support of experts on the platform. And now we're at a point where we have 2 grant writers within the team, basically full-time, that are fully capable of writing grants and very good at winning them.
What were you said Grantify, and what was the name of the other one? The one that
we use Sustainable Ventures. So like they're specifically tailored to know how to write grants for Innovate UK that have a sustainability element. So, and also just to let you know how the grant works, there's a constant open call called smart grants. So basically there's a constant pot of cash sat there for smart grants, and they can be given to anyone. You can be a SaaS platform for sales, you can be a physical product selling widgets or cups and saucers. Like, it doesn't really matter. You can apply for those smart grants, but because they're open call, the competition for them is insane because everyone does apply for them. And we've won one smart grant and lost another. And that's the only grant we ever lost, the smart grant, I believe. But the grants we won were like super niche. It was like decarbonizing primary industries, of which concrete is one of them, using hardware and SaaS. Like, there's probably only 10 startups in the whole country that could apply for that. And we were one of them. So unless you really mess up, you're in with a good chance. But when you're taking bigger grants or those big challenges, if you take it and you mess it up and you don't deliver on the scope and you spend government's money, you're going to be in trouble. So never just step into it and go, this is free money. It's not. It's quid pro quo, and it requires time, effort, and resources. It is something that investors do value, but they value it with caution because of what I said earlier. They're like, well, that's cool. You won this grant for this scope of work, but how does that scope of work play into us getting to revenue, into market, and the core objective? And there were some times where it was a bit of a stretch to be like, no, yeah, it's really aligned with what we're doing. And it was like, no, we need some more runway. So we serviced the grants, but we always delivered on the grants.
Someone come in and check on that stuff.
Oh yeah, you have meetings with Innovate UK regularly, and you have quarterly meetings. And we've had our ass kicked several times in those meetings where it's like, guys, you've not done anything. So it's like panic stations. It's like when you're at university and you've got an assignment due and you just smashing Red Bull overnight in the library. Like, we've had me and Russ had a few of those nights pulling everything together for the grant, because if they don't sign it off, you don't get approved for the next month payment, and you've already budgeted in your forecast, right? So it's tricky. But if you manage them correctly, take stage appropriate sized grants, knowing that the bigger the grant, the more you've got to manage it. Investors do see it as a real win-win, because it's like, wait a minute, well, if I put $1 in, like Innovate UK put $1 in, which is fantastic. So it's a good outcome if you manage them right.
Well, I could sit here and talk about grants all day, but I think people want to speak a little bit more about investors. I've seen a few different questions into the chat about how did you find your investors. I know you mentioned that you created a list of all the ones that fit your sector and life cycle. So can you talk a little bit more about that?
Yeah, so I'm all about finding cheat codes, right? So Google Alerts is super powerful. So like, if you put keywords in Google Alerts for anything that's coming up online, different regions, any like investing, your type of sector, it will come up with all the deals, all the different investors who are part of those deals. So that's really important. And then another thing, like this was kind of pre-COVID, but like networking events. Pre-COVID, I lived in a much simpler world when I was building CrowdCycle. We were face-to-face in the office every day, and we did face-to-face networking events, and that's just what we did. But yeah, stamp the pavement, speak to people, don't be shy, and just, the cold outreach part is tricky because a lot of investors, you don't want sales emails. Look, guys, we've all had sales emails from recruiters and whoever. It's not cool. So what I found with outreach for investors, it's just like, make it super simple. Just be like, understand what the investor invests in and what makes them tick, and then just send them an email. Don't be like, oh, hi, how's your day? Blah, 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 blah. It's all small talk. They just want to know what sector you're in, how much you're raising, potentially how much runway you've got, any traction you've got, and your team. Just do like a mini. You could almost even fit it in a LinkedIn note. Like, just be like, green tech company, saving concrete waste, stellar team, raising this much. If any traction you've got or investment you've got, and then just an investor's going to look at that and it's refreshed because within 2 seconds they understand a bit of your business and they understand if it's within their sphere to follow up with a call. So yeah, cut the small talk, I'd say.
Yeah, you're not actually selling your business at that stage when you're just trying to get a meeting. That's the only purpose of that initial outreach, is trying to get a meeting. So that's, you got to think about it, just be super clear and concise, give them a hook, and then hopefully you'll get a meeting out of that.
You're just saying I'm relevant, you should talk to me.
Exactly.
Like, you're not giving them any detailed script or telling them how amazing you are and what your USP is and how you're better than you. You're just going, dude, it's your job to get deal flow. I'm some deal flow here. Come and talk to me, and then you can start doing a bit more selling.
On that note about getting a message that resonates with your investors, one of the things that I look for as an angel investor and before I invest in a company is this creating like a paradigm shift within that industry? So how did you create a message that you thought would resonate with your investors?
Well, we looked for investors that want to change big boring industries, right? Like I wasn't in, like fancy sales investor offices who were building sales tools and marketing tools to get your sales pipeline going better, because they don't talk my language, I don't talk theirs. If I go to them and go, yeah, we might get revenue in 2 years, but we've got to build all this hardware first, it's going to cost 3 million quid, they'd just laugh me out of the room, right? Because they're not sector specific. So you've got to find alignment on purpose and an outcome as well. So like our family office heavily invested in green tech, heavily invested in green aviation, heavily invested in kind of formerly mining, but then making mining more sustainable. So like they loved the fact that we were within concrete, and we were traditionally too early stage for them as well. But because we aligned so much on our purpose and their expertise, like their lead investor partner was actually from construction. So like it was super easy to align on that. And then with our high net worths, they're all passionate about sustainability. So it really is just doing your research up front. Because you just cold call, if you just go onto a generic list of top 100 VCs in London and spam them all, you'll go from a 1% conversion to a 0.1% conversion, because you're just hitting people with useless information. You just want to be able to go, I'm in your sector, we care about the same things that you care about, we're at the stage that you invest in, and if you can tick those boxes, then you should at least get conversations going. And then the other thing in terms of strategy is, like, if you think you're going to close in 3 months, it's going to take 6. If you think it'll take 6, it'll take a year. Everything just takes longer. So it's important to have, as part of your overall investment strategy, a what if, a plan B. So like seed legals now, they have seed fast. So like it's always good to be open and honest, like with your early investors or your high net worth individuals. Like we were saved by one of our high net worth investors by cutting us a 50K check there and then, because we were just like, we have a week's runway. Like we thought we were going to close around a month ago, and they're telling us it's another 2 months ago. Now, luckily it was just me and my co-founder in the business at that point. But yeah, the guy there again cut a check 50K and he was like, don't worry about it. So like to have that buffer built in and to understand you might have to call on that is really important, because we didn't have a clue. We were just like, oh yeah, all the noises are good, we're going to close. And it's like, no, it takes longer, and longer than you'd ever imagine. But things like Seed Fast now are making that super agile, which is great. And I'm a big believer in raising little and often rather than the traditional big round raises.
Yeah. I'm looking forward to having the free beers at the Cloud Cycle office again soon after the Series A. We discussed earlier about your raising, like you were raising along a timeline, like continuing on runway. I'd be interested to learn more about how did you decide how much to raise?
There's 2 schools of thought here, right? Because there is, like, when you're kind of new and you're raising your first check, it's kind of like, just take what is ever on the table, right? And like, so we went out to raise, I think it was 1.2 in our first seed round. But we ended up closing at like 1.7 or something, if I remember correctly. And like, there was a big discussion around this, because I was kind of just like, no, I want to keep the equity. Like, you know what I mean? Like a stupid green founder who's just like greedy, who wants more equity in something that's worth nothing. Like crazy. Looking back, I'm like, I'm insane. wiser heads around me were like, look, COVID's just hit. If there's 1.7 on the table, take the 1.7. And I was like, actually, okay, let's do it. And thank God we did, because we burnt through that 1.7 quicker than we thought we were going to do. So if we'd only taken 1.2, we'd have probably died. So my advice, especially in markets like today, is take whatever is on the table. Like, don't be precious about equity. It's only going to be, a few percentage points here or there. But today's current market, take what's on the table. If you overraise, you're doing well, you're sending good market signals out, it might pay you back on the next round because you can say that you overraised on the previous round. And it also might buy you more runway, more product development time to actually get a higher valuation at your next round. So always take what's on the table. We didn't have a specific plan for that 1.7, but it was like that was the market demand, right? So we got that on the table and we accepted it.
Yeah, I think it would be valuable to maybe discuss a little bit more about like how that's structured whenever you're going into an ask with a investment fund or a VC fund. Like, do you go in there with a specific valuation in mind, and then they, will push back? What does the process look like in determining a valuation before you even decide how much to raise or how much they're going to give you?
Yeah, so like obviously valuations are hugely market dependent, and at the minute, all startups across the board are getting battered. I think we're down about 25% or something from the 22 peak. But like when you're raising a round, doing it by yourself can be very tricky, because there's lots of permutations, lots of variables. You could just hire a lawyer, but then is it the right lawyer for you? Are they just going to fleece you with fees? Are they going to say to you, oh yeah, don't worry, we've got your best interests at heart, but then they're actually not going to charge you up front, but then they expect loads of equity back. So there's all these things that are kind of bubbling around, but then there's also lots of founder first resources, which are great. So like Seed Legals is the Bible. Like everything you need to find out is in Seed Legals. So like valuation benchmarks and metrics, how to set a valuation, how we set our valuation. We found a trusted advisor who introduced us to basically all of our high net worths as well as our chairman, and she knew the market, she knew their appetite. So as founders, we sat with her and we were like, what's the reasonable valuation here? And we came to a number. There was some talk of like, okay, well, if we get over allocated at that valuation, should we then increase the valuation to bring the allocation down a little bit? Mm-hmm. And like in the end, we were just like, no, because that just makes us look like greedy buggers, right? Like, it's not what the short term gain is not. Sorry, the long term gain on something like that is not worth the short term pain that you're potentially signaling to your investors. It's like, oh, we got oversubscribed, valuation's gone up. Like, that's not a good vibe to sell. So yeah, make sure you do a lot of benchmarking. Like, try and find companies that are as similar to yours as possible. See how much they raised. Don't compare yourself to a lot of the US kind of raises over the last couple of years, because you're going to be very disappointed in what you're actually going to get. But yeah, focus on the value you create in the business. Understand multiples in terms of revenue. It's really hard with pre-revenue companies as well, because like, if you're a SaaS business, some of them are trading at 20x and some of them are trading at 10x, and it's like, where do you fit in that, and where do you fit in terms of valuation? But think about it from a VC's perspective. What they are investing in is a potential valuation at a future exit. Mm-hmm. You've got to live in their world, and then they counteract that with the likelihood of it occurring. So that's all how their brain works. If they're a 4-year fund, like in 4 years, what's the chance of an exit, and how big will that exit be? If it's 50%, your valuation will be according. That's when they're not money drunk, like in 2022, because then they just write checks for anything. But now much more frugal, and that's what they'll be thinking.
Yeah, looking at the team and making sure that they're the team to solve this problem.
You've got to talk them through the market size. Like you've got to talk them through a clear path. Anyone can draw a hockey stick. My co-founder used to take this out of me all the time, because it's like, Phil loves his hockey sticks, and I actually play ice hockey, so like I do love them. But you've got to have, like I always like to do when I'm doing a financial forecast for a business, I like to do like rockstar best case scenario, median scenario, worst case scenario. I mean, worst case scenario is always going to zero, but like do a really conservative scenario. So you've got 3 lines on a graph, and then you can show an investor that you've thought about upside, downside, and where you think you're going to be. And you can basically show them that risk profile, that wedge where that covers the 3 lines. That's That's the opportunity there, and it's going to be within there. It's not you going, we're going to be $1 trillion by year 3, and he just goes, well, that's bullshit. It's like you've thought it out. You've got a low case, medium case, upper case. It gives you credibility, and it allows you to confidently talk about a valuation based on those forecasts.
Yeah, I think one of the challenges with creating financial models is you're always going to have to make some assumptions, and that's where it gets tricky. So kind of moving on a little bit, like let's say you have gotten some investors interested. Let's say one says, I want a board seat, one doesn't. Talk us through what your thinking would be like on that type of a situation. What are your thoughts on having a board seat for early stage investors?
No. So look, early governance is great in terms of who's on your board. One of the things I would change, like, is sorry, my phone keeps turning into my camera. We went high governance pretty early. So like we got a chairman in with a board seat. We got our head of our nominee structure with a board seat, and we gave one of the high net worth individuals within that fund, who is an expert in construction, a board seat. Actually, then we had our family office investor with a board seat as well. So what's that? 5 board seats, and we used to do a board meeting once a month. I'd suggest that was slightly over-egged and onerous. Like if you speak to most VCs, like 2 external board seats, a meeting once a quarter generally cuts it. It's just that with the types of investors we had, they weren't the shoot from the hip VC. They were the like more private equity, bit more conservative, want to keep an eye on things a little bit more, which was good because we couldn't run too far off track ever. But it also put a lot of burden on the team in terms of, we were writing board packs for 1 week a month, for example, which is time that we're not executing. So I think, you've got to strike a balance between when you need governance and what type of governance, and you've got to strike a balance between having agility as well. But then also it's like, what skill sets are in your team and where are the huge gaps? And if you've got a huge gap, don't just fill it with an investor that's adding no value. Get that investor to pull someone in from their network who actually fills that gap. So yes, it might be your investor that has the board seat, but push them all the time. We've got a gap here. We need to know how to get to market like this or like this or like this. Like we've got a huge gap in SEO. We've got a huge gap in hardware. Can we get an advisor in from your network and allow that person to sit on the board on behalf of an investor potentially, or alongside as an observer? And use observers as well. No harming having more brains in the room than less, especially in the areas where you're lacking knowledge or lacking skills. And observers can add a lot of value that way without actually having a formal board seat. But generally, look, your lead ticket, your lead investor will always want a board seat, and you've just got to figure out what makes sense. But if I were to do it all again, I'd have the lead having a board seat. I'd have one high net worth from the nominee structure who knew about concrete with a board seat, and I'd have myself and my founder before, and that would have and then everyone's needs would have been serviced.
Yeah, although before I was working here, I was on the founding team of another startup. We raised out of Y Combinator, and instead of doing like full board seats, it was just board observers, and they would meet, I think, at the end of every month just to give a quick update, but there was no voting rights given out. Kind of moving forward, I guess you've raised the money. There is some now you're kind of building the company. I'd be curious to know what it's like setting up the early stages of a company, maybe hiring process. What is it like offering early stage employees equity? If you can kind of speak to that a bit.
It's kind of funny because we are still essentially an engineering company, right? We've not got into that big kind of scaling for global sales. We're scaling, but we've not had to set up all that infrastructure in terms of global sales and sales reps in every country. And I'm the CEO, fundraiser, salesperson, right? So I knew for a fact that at least for 2 or 3 years, this is over to the CTO, my co-founder, however he wants to structure this, because it's going to be 80 to 90% engineering, 10% business ops, and a little bit of sales and customer management, which I ran. so it's almost like I could take a bit of a back seat in terms of how the engineering department is structured and the product function. But the key kind of stroke of luck that we had, our employee number one was the head of sensors from Dyson. And like, we didn't believe we could get him. But again, we found a unicorn employee that could run our entire hardware and engineering department. And if you ask him why he joined, it was all because of the mission. Like, he was, he had a lot of fun making hoovers and vacuums at Dyson and working on some cool sensors and, with the biggest budgets in the world. But he wanted that impact. And I feel like if you can reach out to people and pull on their heartstrings and get alignment on impact, you're going to attract a better team. Mm-hmm. And then in terms of culture, I mean, look, I met Bill at my old office, right? It was kind of weird, half COVID-y times, but me and Russ were like, okay, instead of drawing big salaries where we need to pay rent, we're going to rent quite a nice house and have a really good culture around it, where we've got an office upstairs, kind of a co-work in the middle, and then me and Russ slept in the dungeon. But like, that kind of created, and all of our staff still comment on that house because they loved it. Like, it was like coming home, and they worked upstairs and we had a barbecue on every afternoon, and it was just a really nice vibe. And I think when you structure it through your own personality and you're genuine, like, we didn't bring in any culture consultants or anything like that, and it just becomes organic, and then it just becomes like you're almost working with your best friends. And in the early days, we had a little bit of kind of couple of staff members leave, but I think for the last like 2 years, we've basically hardly had anyone leave. Like, it's just pure retention. And I think that's a lot because of the culture we set in the early days. It's really open, it's flat, and we have super talented people because we got that unicorn employee at the beginning. All of a sudden, we attract the caliber of people that is attracted to that, right? We've got PhDs in concrete. It's like, what? How do we have these people? It's crazy, and they all work really well together. Obviously, building an engineering team for a construction tech company, you'd instantly think, well, that's going to be very hard and it's just going to be full of middle-aged white men, right? But it's not. Like, we are fully diverse across the board, and that just makes the company stronger as well, which is really, really cool to see.
Amazing. 1 second here. What do you got? I would like to hear, I guess, some of the valuable lessons you've learned from your mistakes along the way. Never
overpromise, underdeliver, because that was like the pandemic of my personal life in my early days. I think, don't take too much on, like, understand where your time is best spent. If you're doing a task that you're not good at, you don't enjoy, at the expense of doing a task that you're shit hot at, it's not going to have great input on your company. So this involves recognizing what you're not good at. Look, entrepreneurs have egos, some bigger than others. You don't have to be good at everything. You can stick your hand up and go, actually, this has got, like I did, my business got to a point where I was like, I'm not enjoying running it. I'm not motivated anymore. I don't believe I'm the right skill set to run an actual big business I like to build. So always be self-aware. And I wasn't self-aware. So I was probably maybe 6 months in turmoil internally, like going, oh my God, I'm supposed to be this person for the business, but I'm not feeling it internally anymore because the business is already built and like it's scaling out. So always be more honest with yourself. And I think, always try and have a strong mentor network. I do a lot of mentorship now. And I had some amazing mentors coming up. So you've got to find those mentors. And believe it or not, if you go to network events, experienced entrepreneurs are more than happy to give you time a lot of the time, because we've had time given to us in the past by people that we thought were too busy or too, like the founders of Just Eat and Monzo, like crazy people. But they will take time and they will talk to you, and look after your mental health more than anything. Make sure that you've got a good support network, because probably the hardest thing about being an entrepreneur is it's an emotional roller coaster and it can be really lonely, even with a co-founder. So keep the comms open and get that support network around you, and you do just fine.
Speaking to that emotional roller coaster, whenever I was founding my startup, there was a lot of days where you're just trying to figure out, like, you're getting pulled from so many different directions. And you kind of have a analysis paralysis of which way to go. Have you ever experienced that? Like, what are your ways of breaking through that?
Definitely. I use a lot of kind of lean startup methodology now, which I didn't really know when I was building Cloud Cycle. So like, what I like to do is have my riskiest assumptions, So what is the riskiest assumption that will kill your business first chronologically? And like, it should always start with, this person is my customer, this is the pain I'm solving for them. If you get either of those two wrong, your business will fail. So like, I always, and it helps you prioritize. And what happened is, like, and then down at the bottom you've got channels. So it's like, I will get to market by this, I will get to market doing this. So it actually just like really gives you kind of a chronological wave of pain that you've got to solve in a certain order. And if you don't do it at that right point, it could kill your business. So be customer obsessive. You need to be talking to 5 to 10 people a week, your potential customer group, and customer development never stops. And I never did customer development because we kind of like just got these big 3 customers, built this platform for them. And it was like, oh, we could have built something a lot smaller and a lot quicker and got to market a lot sooner, but luckily we survived. So you live and learn. So in terms of prioritization, always just think about every Monday morning, what can kill my business this week? Focus on that.
Yeah, I love the aspect of just talking to customers. Even whenever I was launching mine, we were kind of working on a pivot, and we were essentially A/B testing just within our conversations with customers. So I would have a conversation one day, and I'd pitch what we're currently doing, and the next day I'd pitch, what we might end up doing, just to kind of gauge their kind of emotional reaction to that. I'm getting a question from the channel, thoughts on pricing. I guess I can kind of open or like discuss a little bit of background, like how Phil said they kind of built this towards the 3 main customers. I think you guys kind of are a little bit different than a lot of different startups in the fact that you guys were discussing with these partners early on about what the kind of price they would be willing to pay, and then you kind of worked backwards from that. But if you'd be willing to talk a little bit more about that pricing strategy.
Yeah, so it's weird as well, because like when we looked at the market, there was kind of an incumbent business that had been around for like 25 years with old tech, and it's quite expensive and clunky, and like they sold you hardware to the concrete companies, and we knew where they were pricing, and we were like, oh, we'll just charge the same price as them then. But then as we went through, like Bill said, like it's really been, we've been really like close to our customers, and we've been really collaborative with them in terms of the value that we believe the system can provide versus the value over the long term versus the value it can provide today. And it's been great to see, because like over the years, like when we first started speaking to our customers, they're like, oh, we don't have that much concrete waste, oh, we never get insurance claims like that, blah, 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 blah. And now it's like they talk about us like we've changed their life, and it's like, here's how much waste they've saved, here's how much money they've saved. But in terms of pricing, we've taken kind of a tiered approach. So it's like, digital concrete quality testing is this price. Now, we know we've got all this value bubbling away, but we're not going to turn it on too soon, because we've got our first 3 customers, which are global major concrete companies. And we want to make sure that we can execute at scale before we can start offering premium services and up pricing. But in a nutshell, benchmark competition, see what they're charging. Understand the value prop of each feature or each part of the product that you're providing. Like, literally, if you're thinking about building a platform, write each feature down, what problem that solves and for which stakeholder, and then try and understand the value in terms of cash dollar from each one of those. If you can't do that, you're not refined enough. You might not be understanding like the paying customer market. And if there are more kind of, if you just can't find the data on how much it might physically cost, then start doing some expert interviews with people from the industry and go, I want to solve this pain using this. How much will that cost to save an industry? And also be really careful about soft cost savings. Like, if you're talking about saving people time, you're not saving the company money, because that person's still on a salary and they're still working. So you've got to flip it and go, by saving this time, you're going to like get more profit, get better margins, you're going to win more business because this person could be over here winning work. And then you've got to put that as a KPI and evidence that as you go through, because the soft savings of time saving doesn't really hit with the CFO, because he's like, my wage bill is my wage bill, right? Like, it doesn't really matter. So yeah, understand the value for each feature versus paying for which persona, benchmark your competition, and speak to your customers, have an open dialogue with them, be really open about the value you think you can bring versus what they think you can bring, because there's always going to be a gap. And then say to them, okay, you believe that, I believe this. I'll start here, but how do we work to get to where I think we are? What do you need to see from me?
Yeah, I've never heard about like the time, not being able to quantify the time. That's interesting. I'll take that as well. I just kind of have one more question, but I'd love to. Here we go. Here we go. Now they're coming in. Ade, thoughts on how to approach potential investors for contact information and home addresses for SEIS to fill out application before being approved. I'm assuming that means maybe you shouldn't use your home address for the company. I'm not sure. How would you approach potential investors for contact information though?
Well, hopefully by the time you get into the contact information stage, you've already got a pretty good relationship with them now. Or are we talking like cold outreach, give me your address type thing? I'm not sure.
I don't think you physically knock on doors, Ade. I'm not sure. Maybe
Yeah. Look, always use a lawyer for this stuff. Use a lawyer or use a platform like Seed Legals, because there's lots of compliance, there's lots of GDPR. If you start going off the reservation in terms of how you're handling investor details, you're going to get in trouble, not just from a GDPR perspective, but you're going to get a bad reputation and your investors will leave. So anything that you do in terms of getting private data from your investors needs to go through the correct legal channels, and it needs to be done in the correct way. Because, I'm terrified of this stuff. I have a law degree, but I'm just like, no, let the professionals deal with it, and GDPR compliant, and use platforms where I can.
So my last kind of question for you is, what are your future goals in tech? What are you looking to get out of? What are you looking to do next?
So my plan is to move to the Middle East and either continue working for the venture studio that I'm currently working with, or start my own, or join one that's already out there. But my long-term mission is to just become an investor in a fund, start my own fund that incubates and accelerates founders from disadvantaged backgrounds. So working class, minorities, whatever it may be. I'm not sure if I'd do it here or the Middle East, but yeah, ultimately transition to investing and incubating ideas to my business model for life is to launch as many impactful businesses as possible while keeping a small slice of each for my family and future generations. That's kind of what I want to do. Save the planet while letting it live a long time.
Yeah.
And hopefully funding my family.
Spending a lot of money on sun cream in the Middle East as a ginger Yorkshire man.
Yeah.
Yeah. So do you have any final words for the group?
The number one thing about being an entrepreneur is grit. Like, don't give up, keep going. If you think you've hit a brick wall, find someone who can help you get around it. Don't sit in silence and stew in your own shit, because that's just how you're going to fail and be very, very depressed. Punch through walls, find people who can help you, and speak to Bill, because he's great and Hyper can help.
That's what I was going to finish with. Is you guys, if you have any questions that weren't answered today, feel free to reach out to myself on Apollo or a member of the CS team. We'd love to discuss with you your ideas. As I said, what we're doing is taking ideas, de-risking them, and bringing them to market. It's kind of my role to work alongside the design team in that process as well. So you'd be working hand in hand with me, and maybe I can set you up with a one-to-one call with Phil at some point as well. Just want to say thank you to everyone for your time today. And hopefully, those of you that are in the cohort, I'll see you guys soon. And everyone else, hope to see you soon. Talk to you later.